The numbers today better than expected, not just on the earnings and the revenue line, but just in terms of subscriber growth numbers. That's really a big part of the story here. What happened?
Well, what happened, Becky, is we continued to make progress around what we told the street 2 years ago we were going to do. And I think actually the subscriber numbers are really impressive and really good and demonstrate a lot of hard work and progress. But I think more importantly, we saw the profitability shift that we said was coming in the second half of this year through a combination of, as you see, stronger EPS than what I think analysts were expecting. Our cash flow is in a much better place. And, we're record EBITDA in our wireless business this quarter, and the strength when we see the growth of revenues starting to match the EBITDA increases. That's that profitability dropping to the bottom line in the second half of the year that we kind of told people was going to happen. And I think I'm really pleased about that.
Part of that is because you raised prices earlier this year. What was consumer reaction to higher prices? Was that something they took? Is it sticky?
Well, as we shared last quarter, that price change has gone exactly as we expected it to go. We knew that it was going to be accretive, and it has certainly been that. I think most importantly, it gave us an opportunity to talk to a lot of our customers. And in many instances, what customers elected to do is to move into higher value plans. They moved into maybe a plan that had a slightly higher monthly price on it, but gave them more value and updated the services that they had and the features that they had that maybe their older embedded plan didn't offer them. And they ended up walking away from it feeling like they were getting more for what they were paying because, in fact, they were. But we were able to make most of that stick. We see a little bit of an uptick in churn this quarter. That was expected because of some of the pricing changes that we drove through. But overall, we're really pleased about how that's worked out. And, the offsets against some of our cost inputs ultimately is what allowed us to keep EBITDA margins stable and, in turn, what I thought was a great quarter on a profitability side.
As a result, you are raising some of your guidance in some key areas. I guess part of this is the POPs. 70 million POPs by year end was what you had originally said at the beginning of the year. Raised that to 100 million. Now the number is 130 million. What's happening when it comes to 5G?
Well, as you noticed, we were a little bit hotter on capital investment for the quarter than I think what analysts were probably expecting. And most of that hotness on capital investment is coming from investments in the network, either fiber or what we're doing around 5G. And our point of view was we've got a clip going on 5G deployment that's really strong. We like the efficiency that's going on. Getting the additional coverage is helping the network perform even better than it was before. So, we kind of stayed on that course and feel like that's a good thing for our customers. We're still comfortable that we're going to hit $24 billion for the year, but we kind of kept the momentum going, as long as we had it. So, what we look at right now is a really strong performing network. We like the fact that we've got the latitude and the flexibility to invest through this cycle right now because it is, in fact, that improved network on both fiber and wireless. It's giving us the good growth and the good customer subscriber numbers.
Hey, John, last quarter, you came on with pretty strong numbers, but in this interview that when you were speaking with us, you talked about how you were seeing a little bit of a slowdown from customer payment times, that there was something like a 2-day delay. Customers were a little slower paying their bills, and the street read that as an indication that maybe the consumer was weaker. A lot of people were saying that's because we're headed into a recession, and then they were saying, okay, if they're not willing to pay their phone bill, what does that say about their dedication to AT&T? What can you tell us about those same sort of statistics 3 months later?
Yeah, I think when I spoke with you last quarter, Becky, I was pretty clear that we didn't say people weren't paying their bills. We said they were taking a little bit longer to pay their bills, and it was having an impact on working capital. What I would tell you in this quarter, there's been no change. We actually see the exact same dynamic I shared last quarter has stayed exactly where it is. Look, it's the pandemic. People were a little bit more flush with cash. They weren't going out and eating. They were managing their bills differently. We're seeing things kind of return back to normal state. I didn't see anything over the last 90 days that's any different than what I shared with you, a quarter ago. So do I believe that the country has to step back and ask, are we going to be in for a, somewhat rocky or uncertain 2023? I've been pretty consistent in my point of view that, a circumstance where we have inflation running as high as we do, that's not healthy for this country. It's not healthy for the economy. And I'm still concerned about that. And I think we can see evidence that there's pressure on those individuals who maybe aren't as flush with cash and live a little bit more paycheck to paycheck. And we service the entire breadth of the American consumer. And so there's segments of our base that if the economy sours, are going to be working through some dynamics around that. But the good news is that we know that they put paying their communication services extremely high on their priority list, somewhere right underneath food. And we expect they will continue to pay and buy our services, albeit they're going to have to manage a little bit more difficult environment.